So today's session is about support and resistance trend lines. And based on this trend lines, I'll show you the charts. Okay, so let's begin this little topic. So now you can hear me? Yeah, that was in Thailand. I am going there again. I love it over there. Anyway, so you can hear me clearly. If you don't, please let me know. So this is the price chart, just a general chart of a market which is moving upward. As we can see, uh, let's say it started here and the end point is here. So how do we draw the trend line? The first thing we do is first is that these points where the prices are bouncing upwards are called reaction points. So look at this price. It bounced from here and then it reached up. Just imagine a price. It reached at this price and then it bounced back down. So when it bounced back down, it made a higher high than this point. So in order to draw the trend line, you need at least 2 points. So we got this 1 point here and we got this 1 point here. So let's assume the market has only 4 prices right now. This one, this one, this one, and this one. So what you can do is you connect these 2 points. Now, in order for the trend line to be valid, the price has to touch the third time. So if you are at this price point, let's say you are at this price point, you can draw an imaginary line, a dotted line, extending parallel to this line. And let's say you draw the line here all the way up. So because you're here right now. So when you draw a parallel dotted line, the price of the market has to touch this dotted line. So when the price bounce back up and make a higher high than these two price and bounce back, it should bounce back to the dotted line. So when it does, that's the confirmation of a trend line. So then we can say that the trend is valid. So in other words, the price is here, the market is here, it touched this price, then bounce back up, bounce back down. We connect these two dots, we establish a trend line, and then we extend a dotted line, right, all the way parallel, and then the price move up, comes back down. The moment it touches and bounce back up, that's when we know the trend line is valid. So now we have a valid uptrend line. Another thing to watch is when the stock or market is bouncing upward, it needs to bounce with a higher volume than the when it's moving down. So the volume needs to be lower compared to the volume when it's moving, when the market is moving to the upside. When the market is moving to the upside, it should move with a force. So it has to have a momentum. When it's moving down, the momentum is low. So that's the definition of upward sloping support line. So why it's called support line? Because when the market touches the line, the price bounce back up. When it touches the line, it bounce back up. So these are the valid support line. So next, if you extend further, the price has to move back down. If the price moves, suppose if the price moves or accelerate at a higher speed, it's called speed. If the price moves at a higher speed to the upward, then you may have to draw another line because the trend is faster. So that topic I'll cover some other time, how you can draw another line if the stock moves upward at a faster rate than before. So for now, just assume that the market has to touch at this price. So when it bounces back up, it touches this line and then goes up. So every time, if the trend line is valid, so every time the market touches the support trend line, you can go long, provided it doesn't break. So when you see it's not breaking, it's turning back up, you can go long, and it's called upward sloping support line. All right. So let's go to the next slide. So through this example, I'm showing you. So let's say this is a price chart, candlestick chart. So we are seeing let's say we are here and we see this candlestick and we say, okay, this is where the stock has moved up and then came down. So you can draw a support line right here. Now if you extend, suppose you say, okay, this, if in order for these two prices to be valid or support line, I can extend a imaginary dotted line. So you extend it line like this. So as the stock moves up, here is another type of support line. It's called horizontal support line, which I'll discuss more later. The stock is moving up and down, and touching the support line and bouncing back up. So this is another kind of support line. So now when you see this is a price point 1, price point 2, and the third time it touches here with the hammer. So this is another valid trend line. So anytime in future when the stock bounces to the support line and bounce back up, it's a valid support line. But it didn't happen. The stock gap down. So the trend line is broken. In this case, the trend line is broken and the market just simply crash. So the point I'm trying to make is, in order for you to draw the trend line, you take 2 points and connect it, the close of the or the low of the price, you connect and then draw an imaginary line. And then when the market touches the third time and bounces back up, it's a valid line. So till this point, it was a valid trend line. Till this point, it was a valid trend line. But then when market gap down, it gave a sell signal. Now, this one is a head and shoulder pattern. So this is a shoulder, this is the right shoulder, this is the left shoulder, and this is the head. So in the head and shoulder pattern, this is the neckline. It's called neckline. So you draw a neckline, and if you look at this neckline or support line, rising support line, the market is touching and bouncing back up, touching and bouncing back up. So it is holding the support, and then it touch here. It's a valid support line, bounce back up. But then the right shoulder was formed, and the market gapped down and gave a sell signal. So the trend line is broken. So this is the sell signal right here. Okay. Next one. So in this chart, before we saw an upward sloping support line, right? Now there's the upward sloping resistance line. So what is happening in this kind of pattern? So let's see this. The market is here. So let's assume the market is here. It made a high here and then reacted. It's called reaction point. It just reacted and came down here. And then it bounced back up. So when it bounced up and made a new high and pulled back. So you can connect two dots, these two price points, and establish a trend line. Now you need a third line to make a valid trend line. So this is your initial trend line, but it's a resistance line because the market is touching and bouncing back down. Market is touching and bouncing back down. So and it's an upward because it's making a new high. So when the market bounces back down and then moves up, it moved exactly to the trend line defined by these two price points. So now this is established trend line because it touched the third time. In order for the trend line to be valid trend line or significant trend line, the market has to touch 3 times. So it touched the third time and then it bounced back down. So the trend is up, but it's facing a major resistance at the trend line. So anytime, I mean, you can go short when the market touches the trend line, provided you know that it is an upward sloping trend line. It is facing the resistance, but the market can easily break above. So when the market breaks above this line, the resistance is broken. And when if it doesn't pull back down, then the market would just keep going up, and this resistance is no longer valid. So this is an upward sloping resistance line, upward sloping resistance line, because the market facing the resistance. Anytime it touches the resistance line, it comes back down. But it's making a higher high and lower low, higher high and lower low. So when the market makes a higher high and lower low, it is an uptrend, but facing a resistance. In the previous chart, it has a valid support. So this kind of a chart is better to go long than this kind of chart, because you never know how low the market can pull back. Because the third time if the market fails to break, chances are it can easily come down, especially if this low is broken with the volume. If this low is broken again in future, suppose low is broken, the channel, this is a channel. So you can draw another line here, and it can turn into a channel, price channel, and the trend can reverse to the downside if the low is broken. So if the low is broken here, this side, the trend can reverse to the downside, and then you can get caught easy. So whenever, if you are long, if you got entry here somewhere or here, you need to exit here when the price touches the upper line, because it's a resistance line. And you can establish the long again once it breaks this line like that. Okay. So we discussed upward sloping support line and upward sloping resistance line. Now we will discuss downward sloping support line. So downward sloping because the market is making a lower high and lower low, but it bounces up whenever it touches the trend line. So what's going on here? Let's say you are here and the market bounced back up to here, then it bounced back down here. So these 2 points, you can connect these 2 points and make like a trend line. So you say, okay, this is my trend line. Let's see if it touches the third time. So you draw an imaginary dotted line from here to here, all the way down, extended. And then when the market bounces back down here, that's your, and bounce back up, touches and bounce back up, that's your valid support line, because there are 3 points, 1, 2, and 3. But the market is drifting lower. So the market is drifting lower. It's making a lower high and lower low. So actually the market is drifting lower, and going long in this kind of a trend line is not recommended. If you are long, if you go long, then your exit is faster, knowing that it can reverse. So your exit is faster. Whereas in this case, in this kind of a situation, you have a bigger potential in the trade because the trend line is upward sloping. Whereas in this situation, you have a less potential. You don't even know when the market can reverse. It can reverse here or here. So this is not an ideal long situation. It's a downward sloping support line. So if you can figure out the resistance at these levels, then you can go short and then cover here. You know, this is the support line, and it extending the support line, and the market is just bouncing up and then coming down. So it's well, this is wrong here, upward sloping. This is supposed to be downward sloping support line, downward sloping support line. This text is wrong. I'll correct it. Downward sloping resistance line. So this kind of chart is ideal for going short. So in this case, the market is making lower highs and lower lows. So lower highs and lower lows. So this is ideal for going short. So what is happening here? The market is bouncing from here to here, right? Then pulls back, make a lower low, fine. Then you say, okay, let's see what it does. So it goes here. So now you have 2 points. You can connect these 2 points and have establish a trend line. So you say, okay, this is a trend line. The third time, you can draw an imaginary line, dotted line from here all the way here, extend it, and then market bounce back down, make a lower low. Okay, fine. Then it reacts, go up and touches your imaginary trend line. So when it touches the trend line, it's a solid trend line. So it establishes a trend line 1, 2, and 3 point. So you can go short. If you see the reversal, you can go short right here, right here. The short is right here and here. So this phenomena can continue. It can come down, then bounce back up somewhere here, and come down, bounce back up. And this line keeps extending all the way to here, and the market is just keeps going down. So going long in this kind of situation is very risky. You should always look for a going short in this scenario. So look for the entry towards short. It's safer than going long, unless the market breaks through this trend line. So market does break through, and then the trend is changed. So when the market breaks through this line with a force, there is some catalyst, then the trend has changed, and then you need to draw another trend line, upward sloping. So once you establish an upward sloping trend line, then you are going long. So you have to follow that. So this is an example of a downward sloping resistance line. So the trend started here. You see, the trend started here, going short. Then it touched here. So this is a trend line you establish, and then you establish an imaginary dotted line right here, all the way down, down, down. You can extend it. So this thing has not happened yet, right? So you are here. Now the market is drifting. You have a trend line defined. So when the market touched the trend line, this line, imaginary line, is you have established. This trend line is valid. This is your short again, all the way here. Then when it touch again, then there's another short. And then here the market broke out. So when the market broke this, now the trend is no longer to the downside. The trend is to the upside. So your exit is here, and this phenomena happened, breakout. And this is your resistance right here, because the market did not try to break many times and it failed right here. So this is one big bearish candle, and this is the second time you draw the line. You draw the line and establish a trend line. So initial trend line, then you draw an imaginary line all the way down, and then you are trading. So when the market is bouncing up, down, is still down, pull back, touch, this is your established trend line. And then you go short. So you're short here, somewhere here, wherever you're short. This is your another entry short. This is your another entry short. This is where you said, okay, my another entry for short, but then it didn't happen. Market broke to the upside. Okay. This is another downward sloping resistance line. So this is the first price point. This is the second price point you connect. So this is your downward sloping resistance line. The resistance line can be horizontal or it can be downward sloping. So this is a downward sloping. Now every time the market touches, it comes down. Market touches and come down. So you have established a valid support, valid resistance line on the top. Okay. Now this one has a downward sloping support line and downward sloping resistance line. So both of them combined. So what is happening here? So this is a downward sloping support line. So you do a downward sloping. Suppose let's take this price point and the market bounce back up because significant turn. So you take this point and then the market touches here and bounce back up. So this is your second point. So you draw this line and then you extend it. So when you extend it, it's right here. So and your resistance point line is from here, first point and second point, and then you draw the imaginary line. So this is your second resistance line and this is your support line. So what happened here? So you know the market is trending in a very tight zone, and then the buy signal came here, it bounced back up and it broke through. So the market bounced back from support and broke through the resistance and then continue upward. So your signal came here, your confirmation came here, third confirmation came here, and then all the way up. So downward sloping support line and resistance line. Now, the market can have a horizontal support line and a horizontal resistance line. This is very easy. So the sloping support line and resistance line is hard to draw, but you will get it. If you keep trying, you will get it. Practice. So the horizontal support line is easy, and this is the way it works. Um, you need to see if the market touches 2 or 3 times a price point. So 1 time and then 2 times. So we can see the market is not breaking this line. So this is a valid support line. Anytime the market touches, bounces back up. It doesn't even come back down. It doesn't come back down. So this is a valid support around 173 price level. So 173 is a price level where it has a solid support and the market went up. So if the market is here bouncing up, look to the left side and see what's going on the left. Did it market bounce before? If it did at least 2 or 3 times before, at least 2 times, even one is okay. If it's not a valid 100% correct support, but if ideally 2 more times, and this is the third time you're seeing it, and then you go long. Now this one, horizontal resistance line. So similarly, the support line, this is the resistance line. So you see the market touch here and then touch here, 1, 2, and then it doesn't break. It crashed here too. So this is your first resistance line because the market crash. Then this is your second resistance point, market crash. And then it didn't even reach here, market crash. And then the fourth time, market crash again. So this 6,400 plus point, price point, this zone is a valid, strong resistance. So knowing this helps you in exiting the trade if you're long somewhere or going short. If you're aggressive trader, as soon as the price touches you, or especially like this, when you see this candle, you go short, or you need to exit even before the stock touches this resistance line. So 1, 2, and 3, and you can count this one also as third point because it's a valid resistance here based on this. It's a valid resistance zone. So the resistance is not just one price; it's a zone. So it's a defined zone. So the zone is right here, right here. So this is your zone. In this case, this is your zone. So it's not just one price point. It's this area is perfect zone. So anytime the stock touches, goes into the zone, if you're aggressive trader, as soon as it goes to the zone, you go long. You watch your intraday chart and you go long. If it violates, then you lose, and you initiate your position with a tight stop and little position. And then when you see the stock doing its thing, then you confirm it and then you go long. So that's the way you can make big bucks. So first you go long or short with the initial position, just a little bit, and watch that stock. And if it does its thing, then you add to your position. If it's not, then you lose little, but you can make big bucks. So that's it for this session, and then I'll show you the charts in another slide. So we cover just a little bit of support and resistance line. I cover more into in my 7-month coaching, goes into more detail for at least 1 to 2 months, 2 months just on this topic. So if you're interested in it, send me an email and I'll send you the details. We talk about 75 minutes, what we cover, how we cover, etc. So this email is right here, ask us at financialmarketswizard.com. And there's another advertisement. I have a 2-week trial for my swing option trading service for $27. So if you're interested, send me an email and I'll send you the PayPal link just for $27 for 2 weeks, not every month, only 2 weeks. Some assume that it's forever. It's not forever. Okay, so let's see. So this is an Apple chart. I showed you, I created it on 24th of July, and I showed you this, that so I'm trying to explain you the support and resistance line concept. So you can see many support line and many resistance line, upward and downward. And this is a strong long channel. This is a channel, and I showed you this chart in my last presentation or somewhere before. I think I showed you. So this Apple, I said, the Apple is hugging this line here, is going up and down, and it can do both things, right? It can easily come down or it can easily go up. So it went up. So I mean, what's the point, right? It went up or down. It went up, but uh, there was no clear clue on this kind of chart. When the stock does up and down, at the higher level, it can do both things. It can easily come down, or it can easily go up. But I was telling you that it's hugging the support, upward sloping support line. And in the earnings, it went up crazy, as we know. And this is what happened on Apple. It gapped up. So now Apple is, I mean, people say, okay, can it fill the gap? Maybe, yeah, in the future it will. When the market is going south, everything will come down and it will fill the gap. But for now, Apple is in uptrend and it can easily go 225, 250. So the way I would do, let me see if I have another chart of Apple. Yeah. So today's chart at 2:32 p.m. So this candle is telling me that Apple wants to go up, but I didn't get any confirmation. So I wanted to wait for it to cross the midpoint of this bearish candle. If Apple, so I have set my alert on Apple and it didn't trigger. So if it goes above this midpoint, I would go long on Apple. So again, another buy signal will trigger. And I drew this line, this upward line, and this is my target. So I would see where it's going. 225 probably. So Apple headed towards 225. So this line I will keep on drawing and seeing what the Apple is doing. And my entry will be here, midpoint of this candle. So as soon as it crosses, I go long. And my stop is set below this, where this is where it bounced back up, right? Okay, so this is ATVI chart, and we were short. We had puts and we made great money, and I want to show you why we went short. So this is what happened. This is ATVI fell, right, and then for 3 days it moved up, but it moved up within this bearish candle. So when the stock moves up or retraces and it stays within the previous bearish candle, it is still a short. So the entry comes. The entry comes when the close of the previous bearish candle is broken. So as soon as the close was broken, I went short and I sent the alert to all my members, and we closed here. We closed today. We bought the put for $1.90, sold it for $2.60, 65, something like that. So this was the reason for entry. Oh man, they are putting puppies on fire. Okay, so this was the reason. And I was looking at this support. I said this will break or not. So usually when the volume is high, it breaks. When the stock is crashing down, the trend line can be broken. But we know that there's a 200-day moving average below, so the stock can easily halt right here. So that's what it did. Maybe it will come down, dip below this 200-day moving average, and it holds 68 and then bounce back up. But the game is over for me. Yeah. So this is the today's chart, ATVI. So this is what it did, right? Exactly a 200-day moving average, it bounced back up. So expect the bounce at 200-day moving average, and this is your exit. So entry came right here, and exit came here. Entry right here, exit here. This is BDX chart I prepared today. It came on my radar. So BDX is moving up, but it's facing this resistance line, as you see. This I drew this resistance line from here to here. So it needs to cross this resistance. So if it crosses, then I go long. Otherwise, I know that this is the resistance point 1 and 2 and 3. So it's touching the resistance. So why go long when it's doing like this? Just wait for the confirmation. So the entry actually came here, but I didn't see it. The entry was here. Now I need to wait. This is Celgene. So today I saw Celgene moving, and I said, okay, it crossed the resistance. So it has resistance around 90, 91. You see this big resistance. So it's trying to cross. So next leg up could be to the upside, and here's the gap. So it can fill the 95, 95, 96 gap. So I have it on radar. I prepared it aftermarket, or maybe, yeah, aftermarket hour. Before yeah, around 12, something like that. So Celgene is about to break to the upside. So I have it on radar. CME. So this is what I did in CME. I'm long in CME. So when I saw CME bouncing back up at the support, I went long because this is what the chart is telling me, that 162, 160, this area is a support area. So CME wants to go up. So I go long. So just no indicator. There's no indicator here. That was CME. This is CMG. So CMG, I don't trade CMG. It's a big price stock, so I don't trade. And if I buy, I will buy very few shares. So I just don't trade. So CMG gave entry here. It actually entry came here, right, as a support, but then another entry came when it broke the resistance line from here, and it went up today also. So this is going up. So it is a $500 stock. So it will go to 500. So if you draw this imaginary resistance line, if you draw this resistance line and extend it, you should see touching 500. So CMG has $14 immediate potential. 500 is the target. CP. So today I saw Canadian Pacific. So it looks like it's giving me another entry. Uh, so what is happening in CP? You see this bearish candle, and today is a bullish candle. So counter attack going on. So the bulls were here, then the bears came, then the bulls came. So I said the alert trigger above the high of this. So when the CP crosses the high of this bearish candle around 203, I'll get the alert, and when the alert comes, then I'll look at it. So today it made 203.30 high. So above this tomorrow, I'll go long. CRM. So this is an example of a price channel. You see the price channel. So, and this is an upward sloping trend line. So this is exactly, we went long in CRM and then we close it, but it's moving again and I missed it. Although I saw it, sometimes you see it and then you don't take it because you're busy with other trades. So CRM bounced upward. You see, 1 time, 2 times, 3 times, it's a valid trend line. 4 times, and there's a 50-day moving average. So when you are drawing the trend line support, if it's a support, and then there is a on top of it, if there is a uh, Freddie, it's your connection. Last time it was only you having problems, so I think it's your connection has a problem. So when there's a 50-day moving average at right at the support line, then the chances are that's a valid support line. So you don't hesitate, you go long. So this is what CRM did, bounce back up. So on 31st of July, now you see bouncing up, bouncing. This is what CRM did today. So 145. So it's going up. It can go make a new high, maybe 155, 156. If you draw this line and extend it, is going higher, 155, 156. So CRM is going up. DDS today, DDS came, and I don't have a trade. No, I have a trade. I have shares. I have few shares on it. No options. So if you draw this support line, so I take the trade based on this. When it comes, I take it, and my stop loss is set below the line. So DDS gapped up. Now, when the stock gaps up, it needs to continue going up, and then you can, on a pullback, you can add. So I added few shares on it, and it's facing 50-day moving average. So once it crosses, it's going higher. So bounce back, it bounced solidly from the support line. So 1, 2, 3, 4, 5 is all 6, 7. So all this is a rising support line, upward sloping support line, bounce back up. So I'm long on DDS. This is Dish Network. I saw this Dish Network. I did not trade on Dish, but just to show you the example, it broke the resistance line. You see this downward sloping support line, and this is a downward sloping resistance line, and it broke. So it broke. Now the trend is changed. So you need to expect that the trend has changed and it will continue going up. So the trend is to the upside, not to the downside, because the trend line is broken. EDU. So I went long on EDU just based on this. So this is the support line, and the stock bounce back up support, and then this is a solid bullish candle. So I went long on EDU on 6th of August. I'm still long. Facebook. So now I show you the Facebook phenomena, and we made money, too much money, on both on puts and calls, and we'll make more like crazy. So this is where we went short on earning, and some of my members made up to 68,000. So $2,000, the minimum I received email was $2,000 investment became 18,000. So in FB puts, because it crashed, and so it crashed. It's okay. Now, when it crashed, then go long or go short. So we when the market opened, we went long on FB in all my services. Every service I send alert to go long. So I have 9 services, just in case you don't know. So in all my services, I send alert to go long on FB and keep buying because of this. So it gapped down. When the stock gaps down at support, you have to be brave, a little bit brave, to say, okay, I'm gonna take this position. So because you have an edge. So once you have an edge on a trade, you go little aggressive on that side. Once you figure out that you have an edge. So the stock Facebook dropped, and I knew that, okay, this is support line, right? One, if you extend on this side, you will see more. One, this is another line. This is where I send the alert, and no, not this one. This is where we went long again on FB this time. I mean, last time on this hammer. So 1, 2 time, then 3 time it bounced back up, then it crashed. Third time, fourth time. This is a major one. So what are the chances that it will bounce back up? So what I did, I watched FB. after hours when the earning was announced, and I saw this price chart, this price level being held in the after hours. So you need to watch after hours, pre-market hours. You have to spend some time if you want to make some serious money in the stock trading. Otherwise, it won't work. So you will make money, maybe easy way a little bit, but not big money. So big money comes when you spend some time. So after hours, when I watched, I saw 165, and FB when it opened, and then it went to 172, 73. It was trading there. After hours, touch very close to 165. It came to 166. So when FB opened, it opened right here, and I sent alert to go long. And when it touched this, I was still telling them to go long, go long, go long, different strikes. And this is what FB did. So this is what happened. So this is what happened. So now FB, we exited right here on this when it touched 187. So the target was sent before it touched. Target was sent. Target was revised during intraday many times based on the action. This action, this is a super action. So target was revised 2-3 times upward from 181, 184, then 186, and 187, 188. So we exited here. Now FB is telling me it wants to go up again, just based on this candle. You see this? So it's saying FB wants to go up, and it can easily go and fill the gap. And in future, FB will be sitting at 250, and then you will say, oh, I missed the move at 165, I missed the move at 175, 180, I missed the move at 186. Damn, it's sitting at 249. Let me buy FB, and that's where it will crash again. So don't wait for FB to go to 250. Buy now. F5. So I saw this F5 chart today, and I bought some shares. I don't have calls. I bought some shares. Just I'm assuming F5 will cross this resistance line. So I have an end of day service where I send purely just the stock, and the members take trades. So they take trades on their own. I just simply send the stock and the target. So that's another service I have. It's the cheapest one I have. So F5, I assume it will break. So I went long. I bought some shares, and the target is somewhere here in this white space area. So I'll figure it out the target later. McDonald is long, just based on this, and it's facing this resistance. So it's facing upward sloping resistance line. So when the McDonald breaks this line, I expect McDonald is going higher. So maybe tomorrow, maybe after a day or so. But this is the resistance line, upward sloping resistance line. So I prepared this chart today. This is Roku. So Roku was sent on earning play 5 minutes before market hours. I was having lunch. I live in California. I was having lunch around 10 minutes before market hours. Literally, my right hand was busy eating. I was eating pita bread and curry. So my right hand was busy, and then I saw Roku moving up. So I said, what to do? Look at the earning. I said, oh, earning is today. So I bought shares in Roku and some calls, and send the immediate alert to my members and earning play to go long on Roku. And at that time, this chart was prepared after hours. So after hours, before, this is after hour chart. It's trading here. So it's breaking this resistance line. It was trading at 51. It went to 51.60 last time I saw, 51.60, 51.70 in after hours. It was trading at 47 here. So the chart was not like this. So this is after hour chart. So Roku will give us money tomorrow in earning play. So simply straight calls we trade in earning. So far, we have blockbuster winners, only one loser so far. Only one loser, and all of them are winners and big winners, like insane. This is shop. So the shop has given entry right here, just based on this support is upward sloping support line. You see, 1 time, 2 time, 3 time. This is the 4th time and bouncing up. So this was the shop signal, and then it went sideways. So today it gave another signal. Based on just this tiny candle, I went long on shop. So shop is long, and it may go to this 50-day moving average. This is T-Dog. So we traded T-Dog on 6th of August. Today we closed it with good gains, just based on this counter attack candle, bullish candle. So this is bouncing up 50-day moving average, then bearish candle, then bullish. So when I have shown this pattern before in another chart. So it's this bearish pattern is sandwiched in between two bullish candles, right? So when you see like this, you chances are that the stock is going up. I show you another chart, similar pattern. I'm going back to show you the chart, similar pattern. This one, you see CP. So two bullish candle, in between is a bearish candle. So when it is sandwiched like that, you can put alert on the high on this above, and then you go long. So this is what I did on T-Dog. When I saw this, I said, okay, I'm going long on T-Dog. I don't know what T-Dog does. All I know is this is what it's doing. So I went long, and we closed today. So we bought the calls and made good gains on T-Dog. We sold today at around 68.40, 68.50, something. No, around 69. It went 69.50. I had shares also, so I sold at 69.40. My shares and options. So this chart was prepared in the morning. So the target was near 69. We sold T-Dog. Twilio. So this is another earning play trade, and we made big bucks just based on this. So on earning day, I saw this bouncing up from the support line, and I said, okay, I take my chances and go long on Twilio. So I went long on Twilio shares and options in earning play, and this is what Twilio did. You see, gapped up. So this is an exhaustion gap. One gap here, another gap here. So this is a breakout gap. This is a runaway gap, and this is an exhaustion gap. So I teach all this in my coaching to identify the gap and the Facebook gap. Based on that reason, I bought the puts exhaustion gap. So this is an exhaustion gap. So Tilo has exhausted. Now I'm not going long on this one till it comes back down right here, some support, and then I will go. If it reverses to the upside, then I will go long. Otherwise, I'm just watching for it to pull back. If it goes up, it's fine. I can miss it. So this is one gap. And one of my students in the chart saying, is it he identified correctly, Ganesh identified correctly. See, this is a breakout gap, this is a runaway gap, and this is exhaustion gap. So went long here, exited right here. There's no indicator. There's no indicator on the chart. UNP. So we went long on UNP and made big bucks. This is an old chart. I forgot to delete, but just based on this, I think I explained to you last week. So UNP we went long based on the support, and this is what it did. So we went and we closed it around 148, 149. So here we closed it. It's supposed to be deleted from this webinar because I think I covered last week. So we exited based on this move. Now this WHR, so we made big money in WHR, and I sent alert to many services of mine, just simply based on this chart. So you see, this is a downward sloping. I draw the line, and it gapped down. So when it gapped down and on earnings or I think acquisition or something, so doesn't matter why it gapped down, drew the line, and then when I saw this, I said, okay, I will take my chance and go long. So I went long, and I stayed long, and this is what WHR did. You see, moving, moving. So we exited and made big bucks. Win. So this is a win chart, and win is bouncing from the support line. This is the downward support line. It's bouncing up. So I'm long on win, and I expect it fills the gap. Maybe it goes higher, but at least fill the gap at 160. Yeah, so it's 156 now. 156. Yelp. So this Yelp trade, we are long in our swing services, and today I send the alert again at the same time. 5 minutes before I send the Roku alert, I send Yelp to buy 41 strike. So this chart is prepared after hours. It was not here. It was trading at 39, 30, 38, 39, somewhere here. So I saw activity. I saw the activity in buying activity just 10 minutes before market hours. So I said, okay, I need to go long more. I was long already, so I went long more into Yelp shares and options. And after hours, it's up like 13, 14, 15%. So it's trading at somewhere here at 44. Yelp is trading at 44. Alert sent right here, 38, 39. Today, you can see chart of the price, what is close price, and it's right here. So today at market open, we will sell. I have already sent the strategy to sell, what price to look at, what to do, and there will be another email sent before market opens. But in case I don't send, then they already have the email to what to do with the Yelp. So Yelp will gap up from 38, 39 to 44 level. This is Zillow. So Zillow gap down on earning yesterday. So I was watching it. So I watch all the stock which moves up and down in earning. So any event occurs, you need to watch the stocks and see what it will do next. So usually the stock does the opposite after it gaps down. So the chances are that it will do just the opposite of what you expect. So it gapped down and it closed. This is a bullish candle. It doesn't mean that it cannot go down right here. It just means that it gapped down and then it just closed above the open price. That's why this candle is like this. And today when I saw this move crossing of 200-day, I sent alert. So simple thesis, there's no indicator that crossing of 200-day moving average after a gap down is bullish for me. I'll wait for the gap to be filled. Maybe I'll sell here around here. This is my target 54, 56, somewhere here. So I'll just hold it. Now it will pull back. I will receive emails. What are we doing with Zillow? I will keep saying hold. And then when it comes here, then I will send the alert to sell. Lock again. Same story. So this was it for the charts, the stock. I just want to show you the stock market. So this is the 3rd of August Dow Jones chart facing resistance, as you can see. Then it's trying to cross. Then it crossed. It's sideways, and then it sideways. Yeah. So it's in the sideways, but it's at least above 25,000. So it's headed higher. This is SPX chart from 3rd of August. Going higher, as you can see, higher, broke the resistance. So 28.15 was resistance mentioned before. It broke and it made a new high compared to this recent. So going higher. My target is 3120 for S&P. Going higher. This is NASDAQ. So again, it bounced, this NASDAQ chart bounced from the support line, rising support line, upward sloping. 1, 2, 3, 4, 5, 6, 7, 8, 9, so many supports, so many time tested. So NASDAQ going higher, higher, and it go higher, maybe 7,800, NASDAQ 100, higher. This is Russell. So Russell is the one which is facing resistance. So here is Russell facing resistance, big time, right? You can see 1,700. That's it. So Russell 2000 is the one with facing resistance. Nasdaq is the one which is good one, and Dow Jones and S&P. So 1,700 and above, Russell will give another buy signal. Once again, I have a 7-month coaching program. If you're interested, send me an email. We will talk for 75 minutes. And this is my email address, askus@financialmarketwizard.com. And next Wednesday at 3:45, I'll cover another topic. And I have a $27 trial for 2 weeks. So next webinar is on August 15, India's Independence Day, 3:45 p.m. Pacific. And thank you for coming. Bye.